Good afternoon, everyone. Welcome to our Short Verticals webcast. I'm Connie Hill. Happy that you joined me here today. Last week, we started a process that we're going to reinforce week after week. And the first step in the process was curating a watch list that we're going to continue to use. Now, today, we're going to go through basically the rest of the steps so that you can have a real methodical process to go through every time you're thinking of doing a short vertical. So I think that'll be helpful and useful to many of you. So stick around as we get into that. Now, I am joined in the chat by Brent Morris. I'm so glad Brent's here. He's a wonderful coach and a great friend. He is here to maybe help catch some questions that I can't get to. So as you have them, go ahead, chat them in. We want to be able to answer those. And I'll keep an eye on the chat as well. Those of you that are listening to this on the recording, when you have questions, what you want to do is put them in the YouTube comments section, because I go back and review those throughout the trading days and make sure we get your questions answered quickly as well. All right, so hit us up regardless. Now, I do hope you're following us on X. As we see information that's interesting or chart setups or things we think you might have interest in, we'll post about it. And so I'm Connie Hill CS. Brent is Brent Moore CS. And he posts a lot of great content as well. So don't miss out. If you've got an X account, just give us a follow. It's free, of course. All right, let's go through our disclosures and we will lay out the rest of our agenda. Options carry a high level of risk and are not suitable for all investors. What we talk about today should be considered informational and educational. Don't consider it a recommendation. We're going to be using the Paper Money software application of thinkorswim. It's what you download to your computer. It's the most robust version of thinkorswim. Investing involves risk, including the loss of principal. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. That's an important concept for our class in particular because we are always selling some options. And in the end, an in-the-money option has a higher risk of being assigned early. This happens all the time in your live account. It's not something that's duplicated in Paper Money. So we want to make you aware of that won't happen, but that's not real life. It can happen. Past performance of any security or strategy does not guarantee future results or success. Now, I just want to give a quick shout out and encouragement to you that if you can get to any of those workshops, if they're sort of in your area or a short flight, possibly, go ahead and go. These are workshops that people absolutely love. First day is option strategies. Second day of all of these. No, first day is technical analysis. Second day is option strategies. Okay. You will thank me and Brent later if you take us up on this idea of going to one of these workshops. They're free. We feed you. We're nice to you. And you're going to love it if you go. All right. One thing we always want to do is talk a little bit about short verticals. Now, even though this is an intermediate level of class, we're going to have people joining us all the time that maybe they're trying to learn about short verticals and might not have every nuance down. And so we'll spend a little bit of time on that in our discussion. We'll talk about trade management techniques. We'll put on lots of example trades and follow up on some example trades. And in particular today, what I want to focus on is a process for you to follow. Okay, so feel free, take as many notes as you want. I do want to give a quick shout out to a couple folks that are very friendly and chatted in here early. I think first of all, we had Phil, Akbar, Bob, William, Life in the Fast Lane, Wiley, Will. Glad that you're all here today. Appreciate you coming week after week. Now, as far as short vertical goes, focusing on the call side of verticals, we'll look for particular candidates, okay? And last week, we ran a couple of scans that we combined together to put into a watch list that we're going to be using. And we'll refresh this watch list maybe once a month, maybe every 3 weeks, depending on what we need to do, okay? So you'll be able to see that process again. If you didn't see that process, I'm going to put a link to that video in the description out in YouTube. And in fact, I will copy another link out into the chat for those of you that are here new, or not here new, here live. Let's go ahead and send that link out to you so that if you want to create that same watch list to follow along and do your own practice trading, that'll give you that information. This is the first part of the video. You can also get it if you're a subscriber. It's easy to go find our content. All right. we want to focus on stocks and stick with the overall trend of whatever that stock is doing. Okay. If it's bearish, it can be maybe bearish to neutral. If it's bullish, maybe bullish to neutral. Okay. What are the key things we looked for last week? We want higher trading volumes. We want options that have a lot of liquidity, which means open interest. And when we see that combination, typically we're going to have what's called a tight bid-ask spread, which means there's not a lot of difference between the ask price and the bid price. And that's what we want, right? We'd rather maybe have a nickel difference between the two as opposed to, say, 50 cents. Stock has to do a lot more to make up 50 cents than it has to do to make up, say, just a nickel. Now, let's talk a little bit about timing here. There's some things that you might look for on the bearish side of things, okay? We're going to look for stocks that maybe are breaking below a support level. Maybe it's honored it in the past, or maybe it's short term. Sometimes it could be either. And we see it break through there. That can be an ideal time to go ahead and get in. The middle bullet here, pulling back from resistance, meaning maybe it's run up to resistance and maybe it's rolling over. It might be consolidating in a flag pattern. That can be appropriate as well. And then many of you are familiar with a close below the low of the high day. That is something that some traders might look for as well. Now, you're not going to see all of those things happening at once, but somebody might want to identify maybe just say one of those, okay, to feel comfortable moving ahead with that. Now, let's come over to Thinkorswim. We're going to get started there. Going to start out on the SPX. I do have some notes out in my margin, and the one thing we didn't go through were bullish signals. We'll take a look at those as well here. But this is a 2-year chart of the SPX, and you can see overall it's been kind of in a fairly bullish trend here for the last little bit, say last couple of years. And it's just been more recently that it pulled back below maybe that longer support area, and really it kind of formed a bearish flag pattern. So we're looking at a weekly chart here, okay? So we can see for a couple, 3 weeks, it was downward trending, kind of forming that flag. And now we see for a couple more weeks, it's consolidating in that bear flag pattern. And so that gives us the idea that maybe for a certain period of time, we're going to be looking at something more bearish and looking for it to maybe break out of the flag pattern. You can see if I extended this here, it's kind of just where the price patterns or the price action's been going, just consolidating in a tight range. Now, one thing I did in my class of option strategies, selecting an option strategy a couple of days ago, we talked about this market forecast indicator and basically how we might be able to use it. And essentially, it can give us some information about maybe the trend of certain time frames. Okay, so for example, this red line moves really quickly. Okay, it can move from the bottom to the top in a day or two. Okay, so kind of a momentum-based type momentum. A momentum-based time frame, I should say. The blue line is kind of like swing trading time frame, right? Swing trading might be 3 days, 5 days, maybe 8 days, right? But not a very long time. And then this green line is more of an intermediate trend. And so whatever direction those lines happen to be, that lets us know, okay, if it's headed up, it's bullish. If it's headed down, it's bearish. Now we have what we call these reversal zones. This one's the upper reversal zone. This one is the lower reversal zone. And say, for example, on this green line, it had come down into the lower reversal zone. Technically, once it crossed below the 80 area here, then we'd say, okay, we're becoming a little bit more defensive. We're becoming a little bit more bearish following that intermediate trend. And when it gets down in the lower reversal zone, we wait for it to come back out. And when it comes back out and pierces up above 20, that's when we might be coming a little bit more offensive, might be closing down some bearish trades, maybe starting to look for possibility of some bullish trades. Now, it came out of the lower reversal zone here fairly recently. It's not up super high yet. It's now at a 34 reading. And you can see here this market forecast. This is an enhanced version. It'll tell us the exact reading of the green, blue, and red lines and tell you, hey, is it rising or is it falling? Okay, so that if you're kind of a little bit unsure, you can look at those little labels and it'll tell you what it's doing right now. Some of you are familiar with this. Some of you maybe have never heard of it before. In your study set, you have one called Market Forecast. The one that I'm going to share with you, I call it Market Forecast Enhanced because it brings in this terminology. It shades our upper and lower reversal zones, and that can be helpful just from the get-go. So here is that script, and anytime we share a script with you, we have to remind you it's not guaranteed as to accuracy or timing. All right. So we see what's going on the SPX and, kind of still in this bull flag, but it did make it above the 200-day moving average. Okay, let's check out the NASDAQ. Why the NASDAQ? Because in our watch list, we focused on the S&P 500 and the NASDAQ. So here's our NASDAQ 100 here. Similar type thing where it's got a big, long, bearish flagpole, and it's been consolidating in a flag for a couple of weeks now. It too is above the 200-day moving average, which, we were kind of excited to see that was the case. As far as its market forecast lines here, the green is out of the lower reversal zone, but just kind of barely. It's at 27. Our blue line is headed down, but it's almost at the bottom. And if it's almost at the bottom, it may just hit that bottom, say tomorrow, or it could happen today. And then it could bounce right up and just completely reverse. And what we're seeing on the momentum line here is that it has turned up. It's not out of the lower reversal zone yet. Oh, actually it is. Now that I look at my reading, 21.52, it's barely above it, okay? Which means very short time frame, 1 to 2 days maybe. We might look at having a little bit of a bounce in the market. The overall trend isn't necessarily going to change, but these 2 short time frames might indicate a little bit of a swing. Is it guaranteed? No, nothing we look at on charts is ever guaranteed, but it's kind of giving us an idea of what we might consider. And we do have sometimes conflicting things on the chart. All right, next up, we've got, let's look at the VIX real quick. Volatility index peaked up here in the 20s, 28, 29-ish, okay? And that put us in a higher volatility range, but then it just really pulled back, and it looks like maybe volatility's trying to spike up here, but it's not making a lot of progress. In fact, today it's up, maybe 0.17, so 0.17 points, okay? So not hardly at all. But if we do see that kind of run up, we might see a breakout of those flag patterns to the bearish side. Now, given this, I'm going to give you some examples here today that we're going to put in our portfolio that are both bullish and bearish, okay? Bullish for the idea that maybe, well, this is the VIX, but maybe the S&P is ready to pull up here. It came out of the lower reversal zone. So we're going to see, all right? I'll go back to that SPX for just a moment. Okay, I told you it was about 20, oh, it looks like it's 34 on this one, okay? The red line popping up and out of the reversal zone, so it is saying very short-term momentum bullish. And this blue line, if it comes down here and reverses really quickly, which it could, kind of would say those shorter time frames on the S&P, possibly bullish as well. But I would still say we're still in a downtrend. We have one higher high. Today might be a higher low. If it bounces, we'll have to see if it really makes that. Now, as we come up here, let's take a look at something here. We're going to look at Verizon. Now, on Verizon, it hardly looks like it knows the rest of the market is pulling back. Some of these stocks that are communication stocks, T-Mobile as well, is having kind of a look that looks like, oh, it didn't really have that much of a pullback here, right? We have a low, and then it put in kind of a high after that. We've got a higher low here in relationship to that. And then today, a higher high. So we have the beginnings of a turn in the change of the trend, that it's maybe a little bit more bullish short term than it had been previously. MACD, rolling up here, kind of giving a move across that zero line. We'd say, oh, it's flipped from bearish to bullish just today. Now, let's go identify. We've done step number 1, which was we curated a watch list last week, okay? And then today we kind of get our bearings on what the market's doing overall. And then we're going to go through our watch list and identify, hey, does something have a bullish entry signal? Does something have a bearish signal? Okay. So we talked about our break of support, a resistance bounce down, or a bounce down maybe off of a moving average, or a close below the low of the high day could be a bearish entry signal. A bullish entry signal could be a support bounce. It could be a close above the high of the low day. Could be bouncing off of a moving average that maybe is acting as support as well. It could be a breakout. It could be a breakout against resistance. It could be a breakout out of a flag pattern. Okay, so we kind of have this idea. If we're focusing bearish, this is what we're going to look for. If we're focusing bullish, this is what we're going to look for. Now, one thing I mentioned to you last week with this watch list that we're using, we're going to use it for both bullish and bearish opportunities. Okay, and there may be periods of time when we use it for bullish entries and bullish trades, and then maybe a month later, 2 months later, we're using it on bearish trades. Now, one thing I've done here with this list, and it's over here, I cannot share the list with you, but you can run that class from last week. In the very first part of it, I teach you how to build those watch lists. There are a few steps to it because we actually did some combining to make it one big watch list. In any case, all I do, have it sitting here, and I just sorted by today, okay? And I had the bearish ones on the top, and then the bullish ones are on the bottom. And I just went through and took a look at the charts in the watch list, okay? And that might be what we consider the second step, would be we're going to do technical analysis on stocks in our watch list to see if they potentially qualify here. So Verizon's on our list. We'll go with this one first. And it looks to me, like I said to you, it just looks like it's bouncing off those moving averages. It's also made a higher high today, okay, which kind of gives a little bit more confirmation of the overall trend. So we're going to use this for a bearish play or a bullish play. Notice earnings aren't out here until the end of April. Ideally, in an ideal world, we wouldn't try to trade it over earnings. We'd try to be out of it before earnings came along. All right. This has weeklies. They're not super liquid, and liquidity is such a key, man. I just beat on that all the time. You've got to have lots of option contracts out there. This was one of the reasons for creating this watch list, so that we could have stocks we're willing to trade that have really liquid options. So on this, we're actually going to go to the put side. One of the requests that we had from last week, there's a couple things that we're going to do. One was when we're talking about short put verticals, to talk about that that's a bullish trade, and talk about it. Sometimes there's different names for it. We could call it a bullish put spread. Okay. We could call it a bull put vertical. We could call it a put credit spread. And so what I'm just going to try to do consistently is say if it's either a short put vertical or a short call vertical, because those are the only two types of trades we're really going to do in this class. So out here, I've got our delta column, which can be helpful to identify what strike price do we want to use. And we're going to go 44.43 here. We're going to sell that 44. And notice the 43.50 doesn't have a lot of open interest, which is why it's really helpful that we're going to spread it out just a little bit wider than the 50 cents. Here, we'll go ahead and we'll hit sell vertical. And we're going to change this to be 43. And let's see what kind of credit that gives us. Okay, right now it's saying about 26 cents. Okay, so we did a very quick technical analysis on that stock, determined it met a buy signal. Next is, okay, what strike prices might we want to use? We want to use the really liquid ones. Some people will look for a 30-something delta, sometimes a high 20-something delta. Somebody who wants to be a little bit more aggressive might even go in the 40s for a 40 delta. Okay, they might want to bring in a bigger premium and have a lower probability of success. By our right here, on our 44, the probability that it would expire out of the money is about 66% right now. Anything above 60 is considered high probability. Okay, great. It kind of meets that check mark. What is this return? Let's go calculate what that return would be. Now, it's just a $1 wide spread. So we'll take our max theoretical gain of 26. We're going to divide that by our max theoretical loss of 74, basically 74 cents times 100. That gives us about a 35% return. Now, I'm going to suggest that's a healthy return considering we only have 21 days left to be in the trade. And sometimes traders will say, if I can get at least 1% a day for however many days the option has remaining, that might meet their criteria. This one, in this case, is about 35%. Okay, so does that check an acceptable rate of return? I'm going to say yes. Acceptable rate of return. Okay, next thing is just position size, put the trade on, and decide a potential exit condition, which I always like to do. Now, with Verizon, we can probably do in the neighborhood, I'm going to say, of about 18 contracts. Okay, it's changed a little bit since I initially did the math, but I think we'll still be pretty safe at 18 contracts. Because if we take 18 times, we'll just do it real quick. 18 times 0.74. 18 times, I did that. I don't think I did that right, did I? 18 times 74. Let's do it again. 18 times, no decimal in there. Okay, 18 times 74, about 1332, and we don't want to risk more than $1,500 per trade. Okay, so 1332, we're good there. So let's go to our next step and decide what kind of an exit order we might want to do. We're going to do a first trigger sequential. We're just going to put in an opposite order here. And something that I've talked with you about is it's not a bad idea to put your exit point in at the same time that you're putting in your order. And if it meets those conditions, just let Thinkorswim software execute it for you. Okay, you're not having to stare at your screen all day and wonder if it's getting close. I mean, you can wonder if it's getting close, but you don't have to be so tied to it if you know, hey, I'm happy to be out at that point. And the other thing I've suggested to you is not that you think you're being greedy, but don't feel like you've got to get every little last penny out of here. Okay, so we're going to go for a majority. Today, our majority is going to be about 75%. Could it be 60? Yeah. Could it be 80? Yeah. You get to decide where that comfort level is for you, and it might change from trade to trade. But for right now, let's go ahead with our 75%. Okay, so 0.26. If we get 75% out of it, only 25% is left. And so we're going to say, all right, let's go buy this back at 6 cents. Okay, we plug it in. It's ready to execute for us. If it meets that condition, great. You know, one of our trades we're going to follow up on, this is the same thing that happened with it. It hit our target and got us out of the trade, and it really wasn't that painful. It was really pretty quick and easy because we had decided beforehand where we'd be satisfied for that. Jerry had a question here for the MACD. What are the parameters? We'll go back there in just a moment. Let me go ahead and hit confirm and send, and I'm going to put this in our bear short verticals grouping. All right, that's where we put those. And then what are the timelines for the market forecast enhanced tool? The timelines, again, we'll just go back here. We'll just use Verizon here. The green line from being in the upper reversal zone down to the bottom reversal zone could take 6 weeks. It could be shorter, okay, which is kind of intermediate time frame. The blue line, our near term, that it might be anywhere from, say, 3 to 8 days to move from one area to the next. And then the red line is like 1 to 2 days, super quick momentum. And you can even see here, let's see, it was just, what day was that? The 24th, 2 days ago, it was down in the lower reversal zone. And then today it's back in the upper reversal zone. So that's how quickly it can move. All right. Paul says, you know, I'd like to use 67%. Awesome, Paul. You're saying 2/3. You're happy if you get 2/3 of the chunk of that premium. Excellent. Happy to see that you've been thinking about that and sharing it with us. We appreciate that. All right. We've got Verizon in. we're going to switch gears and do something bearish. We're going to kind of go a little bit back and forth because there's cases to be made for being bearish and being a little bit bullish. Okay. One thing I want to point out to you is how you could, if you were using YouTube and you wanted to go find last week's video about how to build this watch list, become a subscriber because it makes it easy for you. Down in the bottom right hand corner of your screen, there's a little blue YouTube logo. You can click on that and that'll subscribe you. Now, if you've already subscribed, don't click on it again because it will unsubscribe you. And then you'll go to take a look at things and be confused. Okay, so you only need to do it once. And then we come over here. Here's our Trader Talks channel. We'll put out here what's coming up next, what's coming up in the future, some of our recent webcasts that we've posted. And then if you want to just come to the playlist, like I was suggesting, come down about 7 rows. And on row 7, you will see our watch list for short verticals. And then the last one we did last week was how to curate a short vertical watch list. Okay, so if you're already a subscriber, man, it makes it really quick for you to be able to go and find it, click on it, launch whatever it is you're looking for. Okay, so join us in that subscription. All right, now we're going to put on our bearish hat. First one, we're going to take a look here. Let's go with this AVGO Broadcom. Well, what's going on with Broadcom? We can kind of see it's been downward trending, right? Downward trending. Somebody wanted to know the settings here on this particular MACD. The default timeframes have been changed to represent shorter moving averages, shorter term moving averages. Okay, so this one's a 613.9. Some might use an 817.9, and some might use 2613.9. Okay, so this one really is condensed down, much shorter time frames on that MACD, 613.9. All right, what's happened here today? Well, it looks like it's kind of broken through some short-term some short-term support here. If we go out a little bit, let's go out to a full year here. I've got another support line here about 160 or so. Could we see it drop from there to there? We could. We don't know if it really will, but that's probably the next area of support where it could find support. Maybe that's a good way to say that. Okay. So we're going to come back here a little bit shorter term, look at our 3 months, and getting in on an entry signal. That is what? A breakthrough support. Okay. Some of you might look at this and say, well, it kind of looks like it has bounced off the moving averages. That's true as well. Okay, so we might see some signals that might meet more than one of these definitions. Okay, it's a bearish entry. It's Broadcom. It's having troubles. We're going to pick on a loser to continue to lose. All right, 21 days out still is a great time frame. Look at the liquidity here. You should be like chomping at the bit. Yeah, this is awesome. Okay, see all that liquidity. We're going to start here. Let's see if these strikes still make sense for us to do. I was looking at doing 82.50 or 182.50, I guess. It's about a 31 delta. And so we're going to sell the 82.50, and it's in $2.50 increments here, and it's nice. We don't need to spread it out. So we're going to go 182, 185, sell vertical. We went through the technical analysis. We saw that we had an entry that we're interested in, technical setup we're interested in. So now it's a matter of saying, okay, what are the right strike prices? And many times we'll just start at a 30-something delta and see if it gives us the kind of return we're interested in. Sometimes we may find when there's a lot of implied volatility and the option premiums are really expensive and juicy, you can go out of the money even a little bit more. You might be able to go out to, say, the 20s. We'll start here with this 31. And let's go ahead and just kind of lock that in place so the numbers aren't fluctuating on us. And let's see, is it a good enough return that meets your criteria? For some of you, it may. For some of you, it might not. Okay. This came off this watch list as well. I should have just kind of showed you where it was. I think it's up here on the top part somewhere. Okay. But let's figure out our return. So 2.5 minus 0.68 is going to give us our max theoretical loss. Okay. It's not 318. It's really, let's go 2.5 minus 0.68 should be $1.82. All right, there we go. That's our max theoretical loss. Okay. And so let's divide it out. We'll go 68.68 divided by 1.82 is about a 37% return. That's nice. Some people might call that acceptable. Some people might say, maybe I'll tinker around with the 185s at a 27 delta and get a higher probability of expiring out of the money. Is that a valid way to do it? Absolutely. You certainly could. Somebody had asked in, I think it was actually the chat from our last class, was wondering about, doing deeper in the money options. We will get to that, but the one thing I wanted to point out is that there could be many ones that are acceptable to you. And you just pick what one you're most comfortable with, the return, and then check out the probability of that it would expire out of the money. This one's already at 71.89%. All right. Well, if our risk here is $1.82, let's see how many contracts we can do. Okay, 1,500 divided by 182, that would be our max theoretical loss per contract. We can do 8. Okay, so we're going to do it. Going to put on our 8 burst trigger sequential. Hopefully this is starting to feel a little familiar, a little routine. Okay, let's go hit create opposite order so we can put in an exit point that we'd be happy with. So how much? Should we just go for maybe the same 75%? Maybe I'll keep it 75% for today, but it doesn't always have to be 75%, right? Phil said, hey, I'm happy at 2/3%, 0.67%. So let's see, let's actually go, let's clear that out. If we have 75%, we've only got 25% left. So we'll say 0.25 times 0.68. That says buy it back at 17 cents. So we're going to do it. We are not going to stick around for everything. We're going to say if we get that big chunk, we're going to be happy and exit. How many of you have ever been in a trade where it was sitting really good, you had a nice gain on it, and you thought, well, let's just go a little bit longer and see what we can get out of it. And then it turns on you, and you end up either with a much lower return, or sometimes it flips to a negative position for you instead of a positive position. Am I the only one that's ever had that happen to them? I imagine not, but that's one of the reasons that we're going to say, hey, we'll be satisfied here. Okay, let's make it good till canceled. Got our 8 contracts. We're going to put it to, this case, this should go on our bear short verticals. I'm thinking I put the Verizon in the bear and I should have put it in the bull. I'll fix that and put it in the right bucket after our class is over. All right. Frankie says, can I show the bearish watch list? So the watch list is both bearish and bullish. Okay. So I have been kind of showing you part of it because it's actually fairly long. Okay. And I can maybe collapse the scratch pad out of the way so you can take some notes. And this is just sorted right now for, what they're down today and then what they are up today. Okay. So it's one list, some bullish, some bearish. And even though something might be up today, it doesn't mean it's on the bullish list. Okay. It just might mean, hey, we're not going to be looking for that for an entry. All right. Hopefully that makes sense. All right. Next up, let's do one more. You feeling more bullish or more bearish? What do you think? We're going to go for another bearish one. Okay. Technology is really getting hit in the shorts right now. We'll reorder this again, and we're going to pull up here Pan W. Let's see where Pan W is. Oh, it's right under Broadcom. All right, Palo Alto Networks. And if we want to look a little bit more what's been going on over the last year, it had been a nice upward trending stock, but with the pullback in the market, what's happening with it? Yeah, it definitely pulled back. It looked like it was trying to rally for us. In fact, it made a low or a higher low here on this candle, right? That low is higher than, say, the previous low could be here, all right? And it kind of came up and made kind of like an equal high. So not a full higher high and higher low, just one higher low. So not a complete look at that. And then today, bouncing down off the moving averages. Now, it could stop here around 172 or so, but that's not super strong support. Down here, a 165 is a level of support that's been around longer, might be a little bit stronger. Okay, so we'll see. Jumping into, does it meet a technical setup? Yeah, it does. It's rolling down, bouncing down off resistance. Some people might have considered an entry yesterday where it was at resistance. Okay. We weren't together yesterday, so we really couldn't do anything about that. Well, I could have traded, but I wanted to wait for you guys. All right. So we're going to go bullish or bearish. We're going to do bearish, short call vertical. Okay. Same thing, we're going to go down our delta column. We're going to see lots of open interest. That's going to make us smile because we love to see that. The spread isn't too wide, about 15 cents, and sometimes we can kind of get it in the middle of that. So let's see what we've got here. Initially, I was thinking maybe that we might do the 185, 187. Or maybe that's a typo. Let's come out here. It's a 28 delta. Let's go at the 185, and we're going to say sell vertical. It'll just go grab the next strike price. And in this case, $2.50 wide. It seems to be just fine. Plenty of liquidity there. And let's go ahead. I'm going to actually, oh, it did go to 60. We're going to lock it in place at 60. So we've got our technical entry. Now, is this the right strike price for us? Now, I did go a little bit further out of the money, which might mean a lower return. But I have 74% probability that it would expire out of the money. Those are good percentages, right, for a higher probability trade. So let's take our 2.5 minus 60 should give us 190. That's our theoretical max loss. So let's divide 60 by $1.90. See what kind of percent that is? 31%. 31% for 21 days. Starting at a 28 delta. Some people might find that very engaging. Okay, we're going to take our $1,500 of what we're willing to risk in any trade. We're going to divide that by 190 because that's our max theoretical loss per share. We can do 7 contracts here. So we're going to do it. Do you know what our next step is going to be? It's going to be the same thing we've been doing. We'll make this a first trigger sequence. We'll say create an opposite order. And then what are we going to do? When we get a chunk of it, we're going to buy it back when we get a chunk. All right. We've been using 75% today. So we'll take 0.25 times our 60. Some of you might be geniuses and know that's 15 cents right there. We're going to go plug it in. We're going to make it good till canceled. And again, we're going to let technology lock profits in for us. In the event that it goes there, we're going to be happy getting out there. We're going to hit confirm and send. We're going to send this to our bearish short vertical bucket. And we just got filled on it. All right. We'll have plenty to pull up, to be following up on here. Now, Paul's wondering, am I using the whole moving average? I did actually pull that up for today. I added our market forecast to it as well. Yes, but this is a 10 and a 20, which are essentially shorter term moving averages. Yeah, we're definitely using that. Yeah, I can share the grid chart here. I don't even think I've got it named anything special here. But yeah, let me share. And as always, on our links, when we share them, they're not guaranteed as to accuracy or timing. If you are listening to this on the recording, I'm going to paste that URL right there on my scratch pad. So just hit a pause button. You can write down the URL so that you too can copy it in and use it if you're interested. Now, I do want to follow up on a couple of our trades that illustrate some really good principles for us. The first one I want to look at is CTSH. Now CTSH, let's just make this say like a 3-month chart here so we can see it a little bit better. We got into it last week. We were seeing it break down, just right down below support, got in that day. Now, what's interesting is what it did afterwards. It went down one day, but it went up the next, it went up the next. In fact, it even went above $80, our short strike price. But we need to know that just because it goes in that area doesn't mean it's going to expire in that area. In fact, by the end of the day, what did it do? It closed down below that 80 area, and it's continued to drop. So this, I think, is a really good example of letting the trade work out, putting on a high probability trade and just being patient and letting it work. We're going to continue to just let it work. The other one I wanted to show you would be, let's see here, Datadog. Now, Datadog, I think I did after our class. I don't think I did it with our class. And it's a very similar thing here. We got in here on the day where I put that green oval on the candle. And what did it do? It went quite the opposite direction. Went above our short 110 contract here. We need it to be below it. Last couple of days, it's fallen below. And so on these types of trades, what I want you to understand is that even if it goes in an area you're not happy about, the trade could still work out just fine, right? It can go up here and pull back in. All right, and it still could be a nice, happy trade for you. All right, last one hit our target today. HIMS, we've had for a couple of weeks out there. We got in here on the 6th of March, and it's just kind of dawdled, okay? It hasn't really broken down below the support area significantly. It's just kind of dawdled along. And so what do we have through here? Time decay, time decay, time decay, little move. Oh, great, we've hit our target, okay? It wasn't a huge gain on that. We only had 4 contracts. It was like $136. So just kind of a little base hit type trade. But this also illustrates these are trades of patience. Let the time decay on them, all right? And as long as they're not giving you a technical breakdown, as long as it's not signaling, hey, we've got to go the opposite way, or this stock is, man, it's changed its spots. It's a bull and it used to be a bear. Yeah, then we consider what do we have to do to manage that. But we're staying below here, our 42 strike price that's short. That was great. We just let it work, okay? How many of you, and I want you to chat this in here, how many of you are practicing short verticals in your own paper trading account? How many of you are really practicing short verticals in your paper trading account? I would hope that all of you are, okay? Whether you follow along with these trades that we're doing in our class, that can be something. You might look at the watch list and like some other ones better, and you practice those, okay? One of the key things is just practicing it. And then when you come on a situation, we can talk about it and what do we do in this situation? And you can ask those kind of questions in our class, okay? Somebody wanted, oh, look at all those yeses, perfect. Somebody wanted to see a little bit more risk profile information. So next week, we will do a little bit more of the risk profile, show you how to use that, as well as I want to teach you, I'm going to call it a dynamic way to put in an exit order if you like to do the same thing over and over. I'm going to show you how to create a template specifically for your short verticals. Okay, so that's what's coming up next week. I hope that you join me. Now, coming up next is going to be getting started with stock investing. So that's going to be more of an intro level class for those of you that are feeling like, yeah, I need a little bit of that information. I believe Mike Fairborn's leading that conversation. He does a fabulous job with it. So join us for that. And Brent, thank you for your help in the chat. These guys kept you a little bit busy, which is good, right? We want to answer their questions. So appreciate you being here. If this is helpful, hit the thumbs up button on your way out. No, I did not see a survey in here today. If there was one, please go ahead and fill it out. But I did not see that. And we had one last week. So you guys did excellent giving me some feedback in that last survey. So have a great afternoon. We'll see you again here at the top of the hour. I'll be back tomorrow teaching Barb's trading a smaller account class, and we'll follow up our trades from last Friday. We'll see you then. Bye-bye.